Time now for the closing bell with Maria Bartiromo and Dylan Radigan.
Well, the momentum is back. Investors looking to build on yesterday's sharp rally on Wall Street. There's a live picture of the floor of the New York Stock Exchange, where the S&P 500 is on track for a fourth straight move upwards as we enter the final and most important hour of the trading day. Hi, everybody. Welcome to the closing bell. I'm Maria Bartiromo here at Cnbc headquarters. Dylan.
Hey, good afternoon to you, Maria. I am Dylan Radigan. We are here at the New York Stock Exchange as well today. The markets right now, again, holding on to some version of strength. Buyers obviously outpacing sellers by a slim margin in the price competition today. Technology, one of the big leadership groups on the day. Crude prices also turning higher at the end here, though it's not having much of an effect on the equity trade thus far. Here are the averages for you. Dow Jones Industrial Average, as we speak, effectively little change, although it has had a positive bias all day. 11 points to move up right now, 13,644. Financials also holding on to strength. A.G. Edwards getting bought out for just short of $7 billion this morning. The NASDAQ, good for 0.4%. It is the strongest performer relatively. I made reference out of the gate there to strength in technology. You see it there. The S&P 500, again, more or less little changed, although it is into record territory. 0.75 is good for 0.1%. Maria.
And let's talk about that story you just referred to, Dylan. Another multi-billion-dollar deal in financial services today leads our top stories of the day. Wachovia, the nation's fourth largest bank, is acquiring brokerage A.G. Edwards for a price tag of $7 billion in cash and stock, just under $7 billion. The deal valuing A.G. Edwards at a 16% premium to yesterday's closing price. This is creating the second largest retail brokerage firm in the U.S., and the combined broker will have more than 3,300 brokerage locations, more than $1.1 trillion in client assets, and nearly 15,000 financial advisors. Private equity firm Thomas H. Lee Partners, meanwhile, and Fidelity National Financial acquiring payroll and payment processor Ceridian. The price tag there, $5.3 billion, or $36 a share. Now, that's a 17% premium over the closing price on February 12th. That was the day before the company announced it was exploring strategic alternatives. These two deals helping to set an M&A record for the month. May has now seen more U.S. deals worth over $1 billion than any month in history. In fact, 4 of the top 5 M&A months in terms of volume have come this year and have been the only one excluding is January on that list. While M&A may be hot, there are more indications the nation's growth is slowing down. The Commerce Department today reporting first quarter GDP came in at a level of 0.6%. That was the slowest growth rate in over 4 years. There was some good news on the manufacturing front. The Chicago Purchasing Managers Index rising a better than expected 8.8 points in the month of May. That's a 2-year high for the index. A reading above 50 indicates expansion in manufacturing activity. Let's get the closing bell market track now and head down to the New York Stock Exchange. Get things started with our eye on the floor of the New York Stock Exchange, Scott Wapner.
All right, Maria, thanks so much. Resilient once again. We're still in positive territory, even with that weaker GDP report today. Brokers certainly helping us along today off of that A.G. Edwards Wachovia deal. Take a look at the financial stocks. The brokers moving higher today. Certainly A.G. Edwards is, Raymond James, Jefferies as well, Stifel Nicolaus and Merrill Lynch, all trading to the upside today off of that news. Transport's leadership group today as well. You had oil prices dropping a bit. In fact, it's the best month for the Dow Transport since January. Northwest Airlines moving out of bankruptcy, beginning to trade over here at the New York Stock Exchange and having a pretty good day along with Continental. And look at FedEx. That's a real nice move in FedEx today, CSX and Union Pacific. So the railroads also responding today along with the airlines. I want to talk about ethanol stocks too, because Bank of America was cutting 4 ethanol producers today, saying a glut in new production capacity would lead to a 70% decline in margins by the year 2009. And you'll see all 4 of those ethanol stocks that Bank of America was talking about trading now to the downside. Some interesting news out of the retail sector today, and most of it positive. Genesco and Foot Locker wanted to talk about Genesco rejecting a sweeten it takeover offer from Foot Locker, also hiring Goldman Sachs as it looks at its strategic alternatives. Foot Locker saying now that it will abandon its bid. Here's some of that positive retail news I was talking about. Tiffany's, for one, out with some strong numbers, said May was doing better than expected, also raised its guidance for the full year. Company now looking for a range of $210 to $215. That is up from $207 a share, and Tiffany having a nice day there. Chico's and Payless also having nice days as well, both out today with strong numbers. Payless recently announcing it was buying stride right. That's a look at what's leading us today. Of course, we talked about technology being strong. Let's head up to the NASDAQ in Times Square and Rebecca Jarvis. Technology certainly a leadership group today. Apple strong yet again. Yahoo strong today. Rebecca, as you know, because of an upgrade today. I'll send it to you.
That is the case, Scott. And the case with Google is that it is making a run for that 500 level close, a price it has not closed above since January of this year. You also mentioned Apple shares, Scott, to the upside today by 2.3%. The company announcing today that Apple TV will wirelessly stream YouTube video by mid-June. You see Yahoo shares to the upside today. Their CTO left today. He said he's going to be resigning effective June 8th. They also got an upgrade from JP Morgan. Ciena shares to the upside by 15% on their earnings news. You also see Dendrian shares up 33.8%. More Provenge news there to come. Mike Huckman will have the entire story and break it down for you later in the hour. Dell reporting after the bell today. It's up 2.1%. And one last story for you. It just got a whole lot harder to get whole milk in your latte. What I'm talking about is the fact that Starbucks will be phasing out whole milk, replacing it with 2% milk. You see the shares, unfortunately, not up 2%. They're unchanged. Now let's head downtown, back downtown to the energy markets and the pits of the New York Mercantile Exchange. With us, we've got Bertha Coombs standing by.
Thanks very much, Rebecca. And we had a little bit of a rally here in crude late in the day. Crude closing up, settling up above $64 a barrel, in part because we've got a little bit of hurricane activity. Tomorrow we do have the beginning of hurricane season. Also, we had an unexpected drawdown in crude supplies last week, 2 million barrels. The expectation had been for a build. We're seeing an awful lot of refining of gasoline, so a lot of oil heading towards that. Gasoline today had been the driver for most of the day, had driven things really low after inventory showed yet another build. But here we are after hours right now, and we're actually looking like we're almost positive here on the June contract, which is expiring this afternoon. If you up in the range expected, up 107 billion cubic feet. But again, as we are entering June, it's hurricane season and time to start watching those storms in the Gulf. Now back to you.
All right, Bertha, thank you very much. To the bond pits we go, flying out to Chicago, Dramamine in tow. Rick Santelli at the Chicago Mercantile Exchange.
Well, you know, you need Dramamine for the equity trade. Maybe you need something to stay awake for the credit markets, but that's really deceiving because every day we seem to add a little bit to the basis point game, and it's adding up big time. Now, if you look at a 3-year chart of 2-year note rates, remember, the Fed's last tightening was June 29th of 06. We're approaching a year. And what has the 2-year note done since then? Well, it most certainly hasn't traded over 5%. And that's the point. You can see this chart's getting back up to the top of the range. Many think it might extend through it. That's key. Now, listen, not only is it, of course, the last day of the month, it's the last day of the month that had a refunding. Look at the next chart. It's a 1-year chart of the 10-year notes. And I was going to tell you that today we moved the comp back from basically late January to all the way back to August before we saw these yields. But yields have moderated. Last day of the month on an auction month, well, we have adjustments. Lehman Bond Index, a lot of buying. So we're slipping back under 490, which is affecting where the 10-year comp is. But no matter how you slice it, many believe today is an anomaly, and we'll probably see rates do what they've been doing all along, moving slightly higher. And 5% is the only area that many traders are thinking about, and a 30-year bond's the only maturity above that at this point. Maria, back to you.
All right, thanks so much, Rick. And now more on the flurry of mergers and acquisition activity we're seeing. Reports today of another retail combination with private equity. Shares of Jo-Ann Stores soaring today past a 52-week high after Deal.com reported the Crafts retailer is a takeover target of several private equity firms, including Leonard Green and Partners. The deal says Jo-Ann Stores could fetch nearly $1 billion at auction, which should be completed sometime in June. The stock up 9%.
Well, M&A obviously one of the driving forces behind the recent rally here at Erected Territory. Tomorrow we get all of the data, though, on the economic front that you could really want. You're going to have inflation data, jobs data. The jobs report does come out. Also the PCE deflator. What kind of an impact will that have on the rally? Well, let's get a gander ahead of it. Jeremy Zirin, senior equity strategist with the UBS Wealth Management. Brian Stein, Allegiant Asset Management investment strategist. I welcome you both. I've got An hour left in today's trading day, which is really less than an hour, I guess, but the last gap you're going to have ahead of this next batch of economic data. Brian, are you more inclined to be bullish or bearish short term going into the jobs and inflation data?
Probably a little more biased towards being bullish.
Data set tomorrow.
Yeah, certainly, I think a similar reaction to Brian. We are still constructively bullish, more longer term. Short term, we've seen pretty good equity market gains over the past, say, 10 to 12 weeks. I mean, markets are up 11, 12% in that period. We had a 4% gain in the S&P last month. Looks like we're going to close this month with a similar 4% gain. But overall, I think that we're looking for about 100,000 payrolls to add about 100,000 tomorrow. That should be pretty much a Goldilocks scenario for equities because it's still not too hot, not too cold.
And Brian, walk us through that analysis. Is the market more inclined to interpret a particularly weak jobs number? Let's explore that for a second, positively or negatively.
Well, it's the case where the stock market needs the number to be not too cold, not too hot, not too cold, really Goldilocks. Meaning if it's too weak, that means, gee, maybe we're getting close to a recession. If it's too...
Let's move to another subject for a second, Brian. Is China the equivalent of the tech bubble of the 90s?
Well, certainly there's been allusion to that. I don't think so, though. It looks like China's growth is very sustainable.
And these manifest themselves. The NASDAQ is still half what it was at the time. So the growth is one thing and the prices paid is another thing. What do you think, Jeremy?
Well, I think that the key about China is that the A-share market for domestic Chinese certainly is in bubble territory. It's trading around 44 times earnings, whereas back in 7 years ago, the NASDAQ was also trading at a lofty 60, 70 times earnings multiple. But the key is for global investors investing in China, the H-share market is at a much more reasonable valuation level of only around 16 to 18 times. And specifically for U.S. multinationals, they're really benefiting from the growth in China. And that's what we've really seen over the last couple of quarters in earnings, is that the U.S. multinationals and their foreign exposure, specifically to the hypergrowth in China, is the reason why we've seen such robust earnings gains for U.S. companies.
Am I wrong to even suggest that there's a sense of euphoria and there's a certainty of the money machine right now around Asian investing that at least psychologically feels similar to the conversation around the internet 10 years ago, Brian?
Well, there is, and certainly, again, there can be a correction at any time. We had a pretty good sized correction back in February, and so that's quite possible. However, the fundamentals look very strong. We have very nice, healthy global growth. And again, I think that's reflected in our own stock market returns, where earnings certainly don't reflect the sub 1% economic growth rate we had first quarter, but they're reflecting the world growth rate. And again, all in all, it looks very positive, and I think you have to say that the glass is 7/8 full, only 1/8 empty.
Right, and a Goldilocks is the what we're looking for tomorrow morning. The weak number or a strong number has its issue. Gentlemen, a pleasure to have you both. Thank you, guys. Jeremy, Brian. Looking at 45 minutes left, third trading day of the week. Dow Jones Industrial Average, a strong open again. Maria, similar to yesterday's pattern, settles back. At this hour, we'll see whether the strength develops into the close, which got us the record, the NASDAQ holding on to strength.
Also ahead, we're doing a breakdown of the deal of the day, Wachovia taking out A.G. Edwards. Take a look at the recent string of deals in wealth management and also look at who may be next to tie the knot.
And later, the early word on Dell reporting after the bell. It is today's Fast Money final call. We'll tell you how you want to set up in the stock ahead of the earnings results, which will be reported here 4 o'clock Eastern time.
Also, after the bell, we are talking about instant analysis on those Dell numbers. We're going to talk to the money man in Dell stock to find out what may happen to the shares tomorrow after those earnings come out. Will the company be able to take back the lost market share over the last year and a half? Back in a minute.
The most active names here at the exchange again, Maria. EMC, it's extraordinary. The trade in EMC, third day this week. It is among not only the most active, it is the most active. Motorola, Ford, Pfizer, and Ceridian rounding out your top 5 Thursday afternoon.
You're watching Closing Bell on CNBC, America's business channel. The Bond Report is
go from
And recapping the day's top story, Wachovia sealing a deal to acquire A.G. Edwards. What's important about this $6.8 billion buyout is that it creates the #2 retail brokerage in the U.S. CNBC's Melissa Lee has the breakdown along with a look at other potential buyout targets in that industry. Melissa.
Hi there, Dylan, and the deal is priced at a 16% premium to
Counting of the part of the business.
Well, that may be true, but actually if you take a look at Schwab and E-Trade over time, while of course they do lots of those $9.99 trades, they also sell a lot of mutual funds and annuities and even mortgages now through that channel. And those are the sorts of cross-sells that the big regional banks want to try and get by getting that affluent or moderately affluent investor into their umbrella.
Sure, and Tom, no doubt we're seeing this.
CMAC is another company in that space.
What do you think, though? I mean, today we get the GDP report out much slower than expected. Now we're below